It's been a tumultuous 2025. I know that's a big word, but it's been all over the place when it comes to real estate. So we're here ending the year in December. Where does the market stand right now? We're going to talk through the trends. We're going to talk through interest rates. We're going to talk through inventory. We're going to talk through inflation. We're going to talk through what individual cities are doing, what the markets are doing at certain price points. I'm going to break down all that stuff today in our monthly market update. Let's check it out. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cannon, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. As always, this is a podcast format, just here to give you accurate information so that way you can make the best decision possible. Not trying to convince you anything, just trying to give you accurate information. So we're going to get into it. So Merry Christmas to everybody. I can't believe it's December already. Man, I'm hitting the mic. Let me tell you. But can't believe it's December. That's crazy. And we're here at the end of the year. It's been kind of a crazy year. You know, we've been up and down with a lot of stuff. Prices of homes, interest rates, inventory, just so many different things that happened this year. So, you know, it's been all over the place, but we're going to talk about where we're ending. So where we're ending, I've got a bunch of slides for you guys. So I'm going to walk through a lot of different information for you so you can see it. And then if you're interested, next week, I'm actually planning to do a bold predictions episode for next year, for 2026. I went to a conference where my coaching company talks about this stuff and what we're expecting to see. So as long as I can get the slides I need for that next week, I'll be releasing that video so that way you guys can see it and see what it's looking like. So let's get into it. Where do we always start? Inventory. So we're going to start with inventory. So normally, remember, a balanced market here is about 25,000 homes on the market. We've been sitting there for months, months on months, probably, 4 to 6 months now we've been sitting around 25,000. So right now we're just under 24,000. Now some of you are going, oh, we're coming down. What does that mean? To me, it's the holidays. In between Thanksgiving and Christmas is pretty slow here. Like June, July tends to be a little slower because of how hot it is here. And maybe not June, maybe July, August, but it's usually a little slower. And then between Thanksgiving and Christmas is usually pretty slow. So listings either are canceled, closing, put on pause, buyers are being put on pause. So there's lots of different things that could explain that. So we're going to go through a couple different things. So I don't have a slide for this, but inflation's sitting around 3%. We've been hovering there for a while. But let's talk about interest rates. So interest rates right now, I'll show you FHA, I'll show you, we'll start with conventional and then I'll show you FHA as well. So a 30-year fixed mortgage for conventional right now, we're about 6.35 and FHA, we're at 5.93. So that's where we are for conventional and stuff. And people have to understand, we're going to keep fluctuating. And I think that's going to continue next year. Where I thought we actually might be a little lower. I thought we might be around like 6.2, 6.1, somewhere in that range by now. But remember, the Fed doesn't control interest rates. We follow more the 10-year Treasury, and there's different nuances with the 10-year Treasury. Again, I'm not an expert on that stuff, but what I understand is there's so many different factors with that, with inflation, with the jobs numbers, with a lot of different things in the economy, that mortgage interest rates are sitting about 6.35 right now. Do I think that's going to come down? Yeah. I think next year, and I'll go more into this probably next week, I think next year we'll probably see rates in the mid to high fives as the lowest. So, I don't think we'll get below 5.5 next year. At this point, looking at some of the data that I've been looking at, I think we'll be in the high fives next year, maybe even the low sixes some. And so, right now we're at 6.35, so we'll probably end the year in the sixes. And then we'll have to see what happens next year because the Fed's going to lower interest rates again, Lord willing, here in December. And then when they do that, we'll probably see a little jump, as always, in the mortgage interest rates, and then it'll hopefully start to come down. So hopefully by the spring next year, we'll be in the low sixes, if not the high fives. That's my hope. We'll see if that happens. But yeah, so that's where interest rates are. And I know a lot of people are paying attention to that because either people are trying to refi or people are trying to determine when to buy. Listen, we're in a predominantly buyer's market here in Phoenix. So to me, anytime's a good time to buy, but that's a conversation we can have if you're interested. So, so let's talk through a couple other things here. So I'll talk about supply and demand real quick. So we'll talk through supply and demand, and I'll show you a couple different charts on the screen. So when it comes to supply and demand, you're going to see three different things here. You're going to see the supply index, you're going to see the demand index, and then you're going to see kind of those two put together and what that makes the market look like. So if you look at the supply index, you're going to see we're about 90%. So we are high supply. And remember, supply and demand, as supply rises and demand falls, prices typically come down. Now, we haven't seen a ton of that, of like major reductions in prices. And I'll put some stuff on the screen to show you what, like, as far as average price point has, or not average, median price point in Phoenix has gone. That's one of those that we haven't seen major reductions. Now, everyone says that and they go, wait, what do you mean we haven't seen major reductions? Like, prices have come down a little bit, sure. And people say, well, I see prices being cut left and right. And the reason you're seeing prices being cut left and right is people are chasing the market. I see sellers left and right that are overpricing their homes and then chasing and lowering the price to where it should be. I see a lot of that right now because people sometimes have have unrealistic expectations. And sometimes it's just like, hey, the market's telling us we need to come down. Okay. And some areas are getting hit harder than others. And I'll go into this in a second to show you some numbers. But for instance, like the luxury market is booming, but the lower end market is not. So I'll show you some stats on that here soon. But so I showed you the supply index. Here is the demand index. So we've come up a little bit. We were around 20%, but we've come up to about 30%. So that's good. That's a good thing that it's coming up. But it's still not where we want it to be. We want it to be closer to normal sales or higher, because then I'll show you the adjusted index where it shows buyers, sellers market. We are in a buyer's market. Now, this is Maricopa County, okay? So Maricopa County, we are predominantly in a buyer's market. Now, that is not the same for everywhere. So I'll show you some Cromford data. Remember, a Cromford report is something I pay for, that I get just for the Phoenix market to show us what the trends are. And remember, so you'll see the Cromford market index here. Between 90 to 110 is a balanced market. Anything below 90 is a buyer's market. Anything above 110 is a seller's market. Now, I think most of these markets that are above 110 are balanced, but they do lean towards the sellers more. So like Fountain Hills is crushing. Fountain Hills, Chandler, Scottsdale, Paradise Valley, crushing. Cave Creek. Why? That's where a lot of higher priced homes are. And that's more of the luxury market. So they are not on market as long. Their days on market's way shorter and they're going faster. I mean, like when you look at over $1 million, homes are just selling faster. I'll show you a chart here in a second towards that, but you can see like there's still some markets going down. Avondale, Paradise Valley's gone down. Paradise Valley had been going up for a while, so they're coming down a little bit. Then you see Surprise going down a little bit, but we still have a good amount of markets in buyers markets, balanced markets. Again, I think these numbers are usually skewed. Usually anything below 110 to me right now in this market is leaning towards buyers. But let's look at another chart here. So this is also from Cromford. So what you're going to see is a market share shifts by price range. And what you're going to see is how the lower end, so below 500,000, is declining, where before that's what had been going up and the luxury market had gone down some. And then probably middle of this year that started changing and we started seeing people who had money starting to buy because it's a buyer's market. So they started buying and it's shifting that market a little bit. So you can see here in between 500,000 to 1.5 has gone up in market share by 4.7%. And what we're seeing is those sales are rising. People who have money are starting to buy now. That wasn't the case at the beginning of the year. At the beginning of the year, like that middle tier, the 500 to 1.5 was pretty slow, probably till about July, August. And then it just started picking up. And then you see that bottom tiers come up 2.2%. And we're just seeing more sales in the higher markets because people have cash on hand. They're paying cash. They're putting a ton down, whatever it may be. So that's what we're starting to see. And that's not just in this market. I was talking to a couple of friends at the conference I was at. They're starting to see that in their markets as well across the country. So people who have money are starting to buy. And to me, that's an indicator of, okay, they saw the market was lower. They're starting to come in. So let's talk about a couple other things. So I'll talk about listing contracts. And what I'm going to talk about is the cancellation rates. And I want to talk through this because I don't think people totally understand how the market's been going. So again, a lot of people tell me, oh, I've seen the markets coming down and it's declining because all of the lowering of the prices. And this first one I'll show you is listing success rate by calendar month. Now, the next one I'm going to show you shows you a little bit better, but what you can see is our listing success rate's going down. So people are listing homes and they're not selling as a high of a rate. So think about this. I mean, they're sitting about 66%, I think 67%, somewhere in that range, 66% success rate. So what that means is 6 out of 10 listings that we get, 4 of them aren't going to sell. And it's like, oh, that's a lot. Because you look at it, like the lowest we've had was back in 2022, we got to 61%. You know, obviously you can see that on that chart, 2008, 2009, we were really low, right? Obviously. But we've come down from, I mean, shoot, back in 2020, 2021, we were in the 90s. That's high. That's really high. Like you can see in between 2012 and stuff, we were in the 70s and 80s for the most part. And now we're in the 60s here, and we've been there for a while. And so that's where, to me, what we're seeing, and I've run into this, where I'll go to a listing appointment, and there's multiple listings I've either not gotten or chosen not to work with them. And most of the time when I didn't get them is because another listing agent was offering, oh man, you can get way more money. And that wasn't realistic. And they ended up canceling the listing with them because, oh no, we sat for 9 months and nothing happened. And so like I actually had it where this year I've had a couple people come to me and they said, hey, we want to list at this. And I said, that's way higher than I think you should. And they said, well, we still want you to do it. And I said, no. I said, I would rather not do that because you have to understand it as a business owner, which I am. I'm a business owner. Like I have people that want me to put the house on the market and let it sit and they cancel with me. Well, what just happened? I wasted money as a business owner because you weren't serious about selling. You just wanted to see if somebody would take a stab. And that's where we see a lot of that right now where people are just taking stabs and they're, oh, I saw this one house sold. I want to put it way up there. And some realtors are desperate and take it. I choose not to do that because I don't want to waste time and money. And so it's one of those that, we're seeing a lot of that right now where people are starting to pull their houses off the market. So the other screenshot I'll show you is the amount of cancellations year to date. So year to date cancellations, this goes all the way back to 2016. You can see the different color lines. I wasn't able to get the years in there. The green line at the top is 2025. That's the amount of listing cancellations we've had. And actually, no, I do have the years in there. Sorry, I didn't think I did. But 2025 right there has the most. We're at year to date 17,000. We're almost 1,000 higher than last year. And why is that? Because we have people who have unrealistic expectations because realtors just want to get the listing. I'm actually doing a video, I'll probably release it here soon, where I talk about like there's so many realtors that are yes men right now. They're like, what do you want to sell it at? Great, let's just do that. And that's not my job. My job is to give you expert advice on what the market is. If you don't agree with it, that's fine. Go hire someone else. But I'm looking at actual data, trying to make you the most money possible. A lot of realtors will just agree to whatever you want. They'll ask you what you want to sell it for, and they won't tell you until after you tell them what, oh yeah, I think that's a great price. Yeah, that's not the way to do it. That's not the way to make the most money because then they just expect you to lower the price. And then you're wasting time because now you're chasing the market. So I'll get off that soapbox. But many people are waiting until next year because they think that the market's going to be better. So they're taking it off during the holidays and they're getting ready for next year, gearing up. And there is something I've talked about before in some of my videos, the Dooley curve, which shows the rhythm of real estate. And we haven't seen it since 2019. 2019 was last year. We saw that rhythm of real estate and they think it's coming back next year. And so it's one of those that's where we're going to see a lot of listings and buyers in the spring. And then we'll see it taper off like it normally does. But we haven't seen that trend. And then historically, that trend has been around from like as early on, like 40s, 50s up till 2019. And then because of COVID, everything got thrown off. But we think we're going back to that normal rhythm. And I hope so, which hopefully that means interest rates come down. Hopefully that means people start listing their homes because what they're banking on is, all right, people are going to start seeing 5% rates, which we haven't seen in years, and now they're going to start buying. And I did that in another video where they talked about, all right, if we bring rates down to like 5.8%, it could bring 500,000 people nationwide, not just Arizona, 500,000 people nationwide back into the market. So we'll have to see. But if you're thinking about buying and selling, you're like, hey, I don't know what to do. Should I move? Should I not move? I'd love to talk with you. Love to take you a coffee, sit down and talk about your goals. I work real estate through relationships. It's not about transactions. It's about doing what's best for you, figuring out your situation. Again, I have people that tell them, hey, now's not the time. Financially, it doesn't look right. I want people to be successful. I'm not just trying to get deals off of people. So I would love to work with you. I'd love to talk with you. My information's right here. Again, would love to take you to coffee. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.